What underpins the optimism at the Walt Disney Company that's absent elsewhere?
Yeah, it's really a strong report, John. I mean, the theme parks, I think, is, of course, the biggest contributor of both earnings and free cash flow at the company at about 55 to 60%. For them to come out and reiterate operating income growth for the theme parks at 6 to 8%, but more importantly, raise guidance, EPS guidance to 16% growth from a prior high single digits just speaks to, I think, broad-based strength across all units, of course, most notably at theme parks, as well as a lot of potential upside, I think, at the direct-to-consumer or the streaming unit, where they've projected about $1 billion in operating profit this year, but we think that can potentially go much higher, especially with the launch of the ESPN product a little bit later this year.
Geetha, it's important to point out that Disney shares are still down about 50% from their 2021 peak. So still a far place to go to climb back to the prior glory. What has Bob Iger done to turn at least the outlook around for a company that had been really beaten up over the past few years?
I think what Bob Iger did most notably, Lisa, is to really turn around the content unit. I mean, the content unit, especially the movies, were struggling with just miss after miss after miss. And then last year, after Pixar's, you had the Inside Out 2 come out, then we had kind of this whole revival in the studio. And now it's kind of, I think, really firing on all cylinders. So you have a pretty good lineup for fiscal 2025. But then you get into fiscal 2026, and the setup is absolutely brilliant as far as the studio is concerned. You have Avatar coming out a little bit later this year, and then they have a follow-up with, Avengers, and then you have a Star Wars movie. So the fiscal 2026 setup, again, is very strong. But it's not just, the movie business, right? It's across everything. It's across streaming, them cutting costs really, really dramatically. I mean, this was a unit that was losing about $4 billion just a few years ago, and they've really slashed their content budget very, very dramatically, I would say, Lisa. It was about $33 billion in fiscal 22. They're bringing that down to $23 billion this year. Again, being very disciplined when it comes to costs across the entire enterprise. I mean, whether that's sports rights costs, whether, again, that's content costs, whether that's marketing costs. So it's really many, many different things that Bob Iger has done across the board, and we're really kind of seeing that bear fruit. Execution, of course, at the fore, very strong execution.